After months of rapidly strengthening housing market, July numbers suggested something different. Prices continue to rise. Inventory remained historically low, and buyers are still paying almost full asking price. But transaction activity started to level off. So what does this mean? Is the market slowing down or simply becoming more balanced? Today, I will break down the latest Chicago housing market data and explain what buyers, sellers, and investors should expect as we move toward the second half of 2026. Let us begin with the latest numbers. Median sale price increased another 0.5% from June, and it's now 4.3% higher than the last year. Price appreciation continued, but at more moderate pace than earlier this spring. Number of new listings declined slightly from June and remain 4% lower than the last year. Inventory also fell again and is now 5.7% lower than the last year levels. Although inventory is still tight, it is not shrinking nearly as rapidly as it was earlier this year, when we were seeing year-over-year declines approaching 20%. Original asking price increased again 0.3% month-over-month and remained 1.5% above last year, suggesting sellers continue to price confidently but not aggressively. Under contract activity was essentially flat, increasing only 0.3% from June and staying virtually unchanged compared to the last year. Meanwhile, buyers are paying 99.1% of asking price, slightly higher than the last year, while average market time remains at 50 days. Overall, this tells us this market is healthy but beginning to stabilize. For buyers, if you are buying a home, this is probably one of the more balanced markets we have seen this year. Inventory remains limited, so desirable homes continue to attract strong interest. However, we're no longer seeing demand accelerate every month. That gives prepared buyers a better opportunity to make a thoughtful decision rather than feeling pressured into every purchase. My advice: be fully prepared. Continue moving quickly on well-priced homes. Don't wait for prices to decline dramatically. Data simply doesn't support that expectation. Bottom line for buyers, competition remains healthy, but the pace has become more manageable. For sellers, fundamentals remain very favorable. Inventory is still below historical norms. Prices continue to appreciate. Homes are selling approximately in 7 weeks. However, buyers have become increasingly educated. They are willing to pay strong prices, but only for homes that are priced correctly and presented well. My advice: invest in preparation, price strategically, use professional marketing to stand out. The market still rewards quality. For investors, Chicago continued to demonstrate stable long-term fundamentals. Price appreciation remained healthy, inventory remained below normal, transaction volumes remain stable. These aren't characteristics of a speculative market. They are characteristics of the mature market supported by supply constraints. For investors focused on long-term appreciation and rental income, those fundamentals remain attractive. So here is the biggest takeaway from July. Chicago housing market is no longer accelerating. It is stabilizing at healthy level. Prices continue to rise, inventory remains limited, buyers continue to pay nearly full asking price, and homes continue selling in a reasonable amount of time. This is exactly how a healthy market should look like. Whether you are buying, selling, or investing, success in today's market isn't about to predict the next headline. It is about making informed decisions based on solid market data. So, if you are buying, selling, or investing this year and would like to discuss how these market trends affect your specific goals, I'd be happy to help. If you enjoyed this update, please like, subscribe, and share with others interested in the Chicago real estate market. And I will see you next month with another data-driven market update.